It feels like something's happened that is quite inextricably linked to, the future of the world, and that the markets seem to be largely ignoring it. Is this a market function that you just don't know how to trade, rising tensions between the U.S. and North Korea, or is it genuinely something that, the market should not be concerned with?
Well, I think it's difficult for market participants to take what's happening now, which is that there's a clear escalation of tensions, and linking that to a breaking point in this crisis, which might actually generate some kind of military response and a macroeconomic and a financial impact. So because nuclear tests are nothing new in Korea, they've been going on for 10 years, and because we have a U.S. administration which hasn't really made good on a lot of threats internationally, I think it's difficult to extrapolate from today to a conflict.
So what's priced in the markets at the moment? I mean,
so
is it just
nothing?
So what cheap cash coming from central banks, is that priced in, or are they at least pricing in some kind of normalization?
Right. I think what's priced in is business as usual, which is you have a steady business cycle, you have no threat of geopolitical disruption, and you've also got very little threat of inflation. So it's kind of priced for perfection.
John, how quiet are the markets? I mean, forget about the Korean geopolitics that we'll be discussing throughout the show today. Is this a normal August? Is this a quieter August, or is there some bustle to it?
Well, it's a normal August in the sense that vol is declining and you're broaching all-time lows in a few asset classes. It's also kind of a normal August in that we typically have shocks in the summertime. Now, whether that's random or a function of people on holiday, I don't know, but it seems like a fairly classic setup where vol is very low and then a shock occurs and you start to get some normalization, which means higher vol, lower risky markets.